And welcome to part 8 of our IRS Fresh Start Program webinar. Here we're going to talk about tax lien releases, removals, withdrawals, and threshold. Joining me is the Tax Resolution Department of our firm, Jillian Terrell, Michelle Wynn, Bob Lien, Tim Pepe, and Michelle Palmieri. And guess what? There are some general improvements under the IRS Fresh Start programs for tax lien releases, withdrawals, removals, and thresholds. But I would just say this with a caveat, and the improvements is in quotes because what was going on before, and in a way still, was absolutely horrible, where the IRS was filing tax liens. I actually saw a case. I went down to my town clerk office. I was looking for something. I flipped through a page, and I saw a tax lien filed for $40. For $40, the IRS filed a tax lien against something. That's it. And so I went to the town clerk, who I happen to know, and I said, I have a question for you. Does the IRS have to pay the filing fee when they're filing a tax lien against somebody? And the clerk says, yes. And I said, how much did the IRS pay to have this recorded? She said, $53. I said, so the IRS paid $53 to file this tax lien for $40. She goes, it appears that way. And I said, well, what happens when this person pays this $40? Does the IRS have to file a release? She says, yeah, probably. How much is it going to cost to file the release? $53. Right? So when we talk about improvements, that's not... The previous rules really suck. These generally suck, is how I would put it. So there are filing thresholds. They actually have a filing threshold now instead of being that $40. They increased it to $10,000. From what they said was $5,000, which was a previous rule. That was a new one that they had to put in place because it was pretty ridiculous. But they actually can file it on any amount if warranted. I still don't know how $40 makes sense. I don't know. If taxpayers meet certain requirements, they can request that the lien be withdrawn. And it is easier to request a lien withdrawal after the debt is paid. And collection personnel can withdraw liens. Before, it always had to be technical services. And so technical services, before we would be able to get things done with them in a week, and now they're backed up to a month or 2 months. And they actually are really good people. They really are, and I'm not being sarcastic at all. We do enjoy working with them. They are really overworked. And so this was a nice thing that it got this off of their plate. One thing I would say is that the lien withdrawals is also one of those things where the previous rule sucked. The IRS will file a tax lien against you when you don't have any property to attach. They don't even investigate if there's anything to attach. They just file it. They file it to punish you. And so the fact is that this is their press. Again, well, we'll withdraw this lien that was BS to begin with. Aren't we great? Don't you love us? That's really the way I kind of look at it. So I want to talk about some of the other thresholds when you're using a direct debit installment agreement. Michelle Wynn, do you want to handle this? Who wants to handle this? People are sure tired of me.
A lot of our clients, one of the two questions they ask is, one is, can we remove the interest? And the second is, can I have my liens withdrawn? I feel like there's a lot of clients who actually don't benefit from this because they've had either a direct debit or have defaulted or aren't in compliance. So I feel like there's a very certain number of people that might fit into this category. So you have to owe $25,000 or less. You can pay your debt down from whatever it is to that $25,000. Let's see. Sorry.
Oh, you know what? I'm sorry. I think I combined two topics into one slide for sake of efficiency.
Okay.
And so I think to give an example for getting the direct debit installment agreement of under $25,000, if someone owes $35,000, they have a lien against them, they want it gone, they could pay $10,000 to get it to $25,000, then do a DDIA and request it gone. Is that correct?
Yes. So you pay down to 25. You have to be in compliance for the past 3 years and filing compliance. So current payment compliance and filing compliance on all your tax returns. and you could have an already existing installment agreement and convert it to a direct debit, and the same rules would apply for that.
And one of the other one of the other benefits is that you can, if you do pay tax debt in full, you can seek that withdrawal. And the difference between a withdrawal and a release is a withdrawal is as if the IRS made a mistake, and withdrawals were pretty much impossible to get, and you would only get them in the case of mistaken identity before. So this was actually a pretty big change in how they looked at withdrawals, and I really credit the National Taxpayer Advocate, Nancy Olson, with pushing this. This was really her baby, I think, to get this off, because a tax lien on your credit report will show up even if it's released. And so people will know, well, if you had a tax problem in the past, maybe you'll have one again. And people doing research on you can find that. So when the withdrawal comes, the IRS sends the withdrawal out to the credit reporting agencies, and the credit reporting agencies just basically strike it out. Like it wasn't there, like with whiteout. So when someone goes to report, it's not even going to show up, tax lien filed, tax lien released. Nothing is going to show up. And that's really a big benefit of it. One of the other parts is there's a lot of people out there, and this is really one of the heartbreaking things that we see with liens, and that people attempt to negotiate an installment agreement with by themselves. And part of that is that, especially if there's securities, they can't have a lien on their credit report, otherwise they will lose something. Someone in insurance, if they have a federal tax lien, it's a reportable event. What happens so much is that people get into unrealistic repayment agreements or are not in compliance. No one's told them they need to be in compliance. And so the IRS, if your debt is more, and I mean your debt could be significantly more, and you may be able to convince the IRS that it's not in their best interest to file a lien. If you're a hedge fund manager, if you are a big player, if this is really going to embarrass you and cause you, and you're able to demonstrate how this is going to make it harder for you to repay the debt you owe, the IRS won't file a lien. But the thing is, you better be sure you don't default that, because if you default that agreement, that lien is going to be filed, and trying to get it off after default becomes nearly impossible. There's still ones we're fighting on. But that would have been a lot easier if the taxpayer from the beginning hired us to do it, so that we could have made sure that it was a realistic agreement and that they actually were in current compliance. The IRS followed their own rules, because that doesn't happen. So I think we also want to talk about some of the other.
I just wanted to say that we are getting a lot of success with the lien withdrawals after everything's paid or an offer is accepted. It's become, pretty smooth for the most part, except in a couple instances where.
So you can get a lien withdrawn after an offer and compromise?
Yes, I don't know if that's part of the Fresh Start, but it is something we do now.
That's pretty nice, because there is a big advantage over doing an offer and compromise versus bankruptcy, because bankruptcy is going to show up on your credit report. But if you do the offer and compromise, not only did you pay less to the IRS, nobody even knows you ever really had a tax problem. So that's a really nice feature. Okay, all right.
And your tax debt still exists. It's still out there. It's just that you're in that trial period, the 5 years, and they'll still do it. Even if it's after you satisfied all your offer, like your payments and everything, you have that 5-year trial period where you could default it, but they will remove it after you've satisfied.
What Michelle's talking about is anytime an offer and compromise is accepted and paid, you have to be good for 5 years. Otherwise, the IRS will have every debt coming crashing back. So there's sort of, when your offer is accepted, it's not really fully accepted till 5 years of you being good. So what she's saying is the lien's going to come off even before that 5 years is up. So the IRS is kind of even giving up something here in this case, because they would have to refile that lien, but there could be, they might be behind a few assets or a few other mortgagors in that case. So that's actually a pretty nice. Okay, all right. Well, this is my favorite thing, I think, about the IRS Fresh Start Program. I really like that. Well, I think that concludes it. This is what the IRS Fresh Start Program, and I would advise anyone who is looking for more on how we negotiate debts. We do have other webinars that go through our whole process. And you'll see some of the solutions we implement are mentioned here: installment agreement, offer and compromise. And it's really about where do you put the solution in place, when do you put it in place, and how do you best maximize your chances of success and have a solution that will actually end your tax problem. This is Anthony Parent of Parent and Win LLP, the IRS Medic. If you got any questions, you can call our hotline at 888-477-4258 or email info@irsmedic.com. And I want to thank you for watching, and please share this with anyone who might be having a tax issue, and visit irsmedic.com for more information.